A brand new week, and it's Mansfield Today with you once again. Being a Monday, we start off with business, and he's the person responsible for the hospital pass that he sent on. He being one Chris Gibbons, who last week was complaining about the cold that was approaching Cape Town. Well, Chris, it hit Joburg this morning. I got up at about 4:45 this morning and dived straight back under my duvet. I believe it's still quite chilly down in Cape Town, and I don't think it's going to get any warmer from the weather forecasts I saw just before I came into the studio for the rest of the week. Yeah, in Jersey, I think we've got a high of about 15 tomorrow, which doesn't augur that well. Nice to have you with us again.
Good morning, Jeremy. Nice to be with you. Yep, it's a phenomenon which happens on a regular basis, and it's called winter, W-I-N-T-E-R. People get cold, and down where I am in the Western Cape, we also get wet as well. But don't worry, 3 or 4 months' time, we'll be back to normal.
Exactly. Coming to the end of the month, well, it's a new month starting tomorrow. What do our markets look like, Chris?
Well, that's a very good question, Jeremy. Let's take a look at the spreadsheet, talking about the JSE, first of all, the all-share index. We're up on month on month, from the beginning of the month to the end of the month. I put my teeth in. We're up just under 1%. So if that's where we finish later on today, that's not bad. But if we look at the JSE for the year, the all share, we're up 13.7%. And that really is, I think, quite a good performance. The top 40, pretty much in the same sort of zone, 12.8% for the year, 0.4% for the month to date. The Rand, the South African Rand, the ZAR, had a very good month, I must tell you. We're up 4.3% on the month so far against the US dollar, a little bit less against the euro, 3.4%, and against sterling, 2%. Year to date, we're hanging in there as well, up 5% against the dollar, 6% against the euro, and 2% against sterling. So we're not in a bad place at all at the moment.
How does that all compare to the international exchanges, Chris?
Well, that's a very good question. Let's again go back to the spreadsheet. The Dow, month on month, that's on Wall Street, of course, is up 2%. But for the year, it's up 12.8. I said we were 13.7, they're 12.8. So the JSE All Share is actually ahead of the Dow, and that's a good thing to see. The S&P 500, 12%. We're up 13.7, so we're ahead of the S&P 500 as well. And the NASDAQ, the tech-heavy NASDAQ, which has taken a bit of a beating, down 1.5% for the month, and it's going 6.7% year to date. So if you had the choice on the 1st of January, and I said to you, do you want the JSE or do you like the 3 big ones on Wall Street, which would you have taken? I guess at that point you'd have probably said, I certainly would have said, I'll have Wall Street, please. And if I had, we'd have come out second.
Yeah, right. An email in from Jeff in Claremont wanting to know to info@mansfieldtoday.com. Wanting to know about Bitcoin. He said it's been a bit of a torrid month for Bitcoin in May.
Torrid. You get today's prize for understatement. 64,800 all the way down to, where are we this morning? 34,400, went down to 31,000, then it went back up to 45,000. And every time Elon Musk tweets, it moves 10,000 up or 10,000 down. Bitcoin is out of control, in my personal opinion. There are others who say every time it goes down, buy the dip. I don't go anywhere near Bitcoin. I don't play with Bitcoin. I don't have any of the cryptocurrencies. I think they're all way, way, way too risky. Having said which, Ray Dalio, legendary American investor, was asked if he would rather have a US government bond, the super safe treasury bill, the T-bill, or Bitcoin. And he replied he would rather have Bitcoin at the moment because the returns that you're getting on T-bills and many other government bonds in developed economies are just so low. He said he'd actually like Bitcoin, please.
Okay, those are the numbers. Let's unpack the story in a different way. What are we actually seeing happen in our economy as we face down this third wave of the pandemic?
That's a good question. It's a story, I think, of retail recovery versus tourism disaster. And if we look at some of the results which came out last week, on the retail side, Liberty 2 Degrees, which we used to know as Liberty Properties. Who thinks up these names, by the way? Liberty 2 Degrees. This is a property company. It's like Process. Oh, I woke up this morning with a terrible case of Process. Oh, I'll go see the doctor about that. Who thinks Quilter? There's another one. Old Mutual spun its investment arm. Quilter. Do we make blankets or do we make investments? Bizarre. Anyway, I'm getting sidetracked. Retail versus tourism. On the retail side, according to Liberty 2 Degrees, encouraging signs of a retail recovery. And we can see it in two key shares which came out last week with results. Mr. Price, for their full year results, they grew their market share by 150 basis points. They gained market share every quarter. They delivered 500 million rand in new merchandise. Online sales channel grew 64%. Total diluted headline earnings per share increased 13.2%. Very, very strong results from Mr. Price, which the market liked. And Pepkor. Pepkor, we see two things. People are buying cheaper, but there are also vacancies cropping up in the shopping malls and the plazas. And Pepkor opened 108 new stores in the last 6 months. And that really does tell you the story about retail. But if you switch across to the tourism side, you can see that it's a very, very different set of circumstances. And again, quoting from L2D, if you're in the know, you don't have to say Liberty 2 Degrees, you can just say L2D. Yeah, okay, Bruce? L2D, right? The only property in its hospitality portfolio which is actually open is the Sandton Sun. Garden Court was due to open round about now. I'm not certain if it has opened or hasn't yet. Occupancy rate for the Sandton Sun, one of the top hotels in Johannesburg, 54.6%. That's absolutely dismal. And Soho Sun also results came out last week. They have laid off 1,000 people. Revenues down 74%. I mean, it's a disaster zone. Take Barlow World, which you think of as a company that flogs tractors all over the world. Well, it does that too, very successfully, but it also operates Avis and Budget, the car rental businesses. And the car rentals are very, very dependent on tourism. If you look at the statement from CEO Dominic Siwela, he says, what happens next depends on vaccinations and whether or not the broader tourism sector recovers. But a steep decline in the car rental business, that is going to affect not just tourism, not just Barlow World, but the broader car industry. Because the car industry biggest client are the car rental businesses. And if car rental businesses are not buying, then the car companies down in Port Elizabeth and in Pretoria are going to be suffering. Now, Barlow World has launched something that it calls a mobility solution. A mobility solution. What that means is you can lease a car from them, from Avis or from Budget, for 7 days or 11 months and anything in between. They're just desperate to get these vehicles moving, to get them out of the parking lots, out of the parking garages.
There's been a huge amount of debate over this proposed Naspers Process share swap. Will it add or will it destroy value? What exactly is going on here, Chris?
Well, it's a $1 million question. It's a multi-million-dollar question, Jeremy, because as you know, Naspers, about 20 odd years ago, took an investment in a very tiny Chinese internet company called Tencent. And Tencent over the years has just exploded. It dominates the Chinese internet scene. It's absolutely massive. And that share of Tencent held by Naspers has grown and grown and grown. They had at one stage 31%. They've actually reduced that to about 29%. And as it's grown, Naspers has just got too big for the JSE. But remember, the other side of the coin is it's a holding company. Why would I buy a share in Naspers when I can buy directly into Tencent? And usually holding companies trade at a discount to what they call net asset value. Investors, modern investors, at one stage holding companies used to be very fashionable, conglomerates, but not anymore. They like things spun off. They like to be able to invest directly in the share itself. So you have Naspers sitting with a problem. It's trading at discount to net asset value, and it's too big for the JSE. So it then gave birth to this beast that we talked about a moment ago, Process, and listed it in Amsterdam and put all the internet assets into Process, although it still holds 75% of Process. Naspers continues to grow because Tencent continues to grow. Process in Amsterdam has become one of the biggest internet shares in Europe, one of the biggest shares, full stop. It just keeps getting better and better. But the discount keeps getting bigger and bigger. And once again, Naspers is simply too big for the JSE. 26% of the JSE, total value when all of this started. That came down when it spun Prosus off. It's crept back up to 23%. So it's proposing a share swap. Investors in Naspers and Prosus will swap shares, and that will move essentially some of the problem off the JSE and onto the Amsterdam Stock Exchange. Sounds like a good idea. Well, there's a Swiss investor, Swiss-based research and investment management firm called Alternative Investment Management and Research. And he, the person who started this company, Albert Saporta, wrote an open letter to Naspers and Prosus, to the CEO Bob van Dijk. And he also sent it to MoneyWeb, to Bloomberg, to the Financial Times in London, and the Wall Street Journal in New York. And he said, the proposed share swap is an idiotic idea because it's certain to increase the discount between the share prices and the value of the underlying assets. He's not impressed at all. He says it makes no sense whatsoever. Holding companies that actively want to durably reduce a discount simplify structures rather than complicate them, usually through major asset spin-offs and major share buybacks, something that Naspers has never done. He is absolutely unimpressed by all of this.
Lastly, we just heard from President Ramaphosa that we're back into level 2 lockdown with adjusted regulations. What are the implications of that, Chris?
Well, I think the key thing is that sigh of relief, Jeremy, which is echoing around the halls from the booze business, the liquor industry.
Not only the industry.
Real fears that once again there was going to be a lockdown which saw booze tighten, and the booze industry has been really badly hit by that. Nothing has happened. And I think the key point there is that the president and his team of advisors have begun to understand the economic damage that is being done by lockdowns without any real health benefits. So that's the first thing. The second thing is restaurants and bars will feel it because obviously the curfew has been lengthened, an hour added to the curfew. So the restaurants and bars will have to close earlier to get their staff home in time for curfew. It's an hour. It will have an impact. Will it be a dramatic impact? I don't think so.
Thank you very much, Chris. It's been wonderful talking to you again, and thank you for your insight. We'll catch up with you next Monday. Chris Gibbons, business journalist, who joins us every Monday here on mansfieldtoday.com. If you do have any questions, then you can drop us an email to finance@mansfieldtoday, that's the number 2, all one word, .com, and we'll pass those on to Chris for his comment on anything you may be trying to engage about, whether it's the market or the numbers. Until tomorrow, when we join you once again at the same time with Advocate Lance Brogden to take a look at legal issues. Have a wonderful day, wrap up warm, and we'll catch you tomorrow. Bye-bye.
Sometimes there's so much you can show me.